On the evening of February 23, 1995, a 28-year-old bank employee packed a bag, left a short note that read, essentially, "I'm sorry," and boarded a flight out of Singapore. He was leaving behind his job, his wife, and one small detail he'd been hiding for over a year. He had just lost more money than his employer had ever owned. Not thousands, not millions, £827 million. More than twice the entire capital of the bank he worked for. Within days, that bank would cease to exist. It had survived for 233 years. It had financed a war against Napoleon. It had helped pay for the United States to buy the entire Louisiana territory. It was banker to the Queen of England. And it was destroyed by one man, working alone, from a small office in Singapore. This is how he did it. To understand how big a deal this was, you have to understand what Barings Bank actually was. Founded in 1762, Barings was Britain's oldest merchant bank, older than the United States itself. Over more than 2 centuries, it built a reputation as one of the most trusted names in global finance. Members of the Baring family became barons, trusted advisors to the British government for generations. Barings helped finance Britain's war against Napoleon. In 1803, it helped arrange the financing for the Louisiana Purchase, the deal that let the young United States buy land from France that would eventually become all or part of 15 U.S. states. Generations later, it was still managing money for the British royal family. Quite literally, the Queen's own bank. By the 1990s, Barings had a reputation built on centuries of caution, discretion, and old-fashioned trust between gentlemen. It was the kind of institution people assumed was simply too established, too careful, too important to ever collapse. That reputation, and the culture of trust that came with it, is exactly what would make it so easy for one junior employee, thousands of miles away in Singapore, to bring the whole thing down without anyone noticing until it was far too late. That employee was Nick Leeson. He wasn't a banking prodigy from a prestigious university. He grew up in Watford, just outside London, in a working-class family. He left school without a university degree and started his career doing back-office administrative work, the unglamorous side of banking, processing paperwork and settling trades rather than making them. But Leeson was ambitious, sharp with numbers, and good at navigating the operational side of financial markets. Exactly the skills that most flashy traders never bother to learn. In 1989, he joined Barings, and by 1992, at just 25 years old, he was sent to Singapore to help set up and run Barings' new futures trading operation there. This was, on paper, a huge opportunity for someone his age. In reality, it put him in an almost unheard-of position. He was placed in charge of both the trading desk that made the bets and the back-office settlement desk that was supposed to check and confirm those bets were legitimate. In most banks, those two jobs are kept strictly separate, one of the most basic rules of financial oversight, precisely so that no single person can place a bet and then quietly hide the result. At Barings, in Singapore, in the early 1990s, Nick Leeson was allowed to do both. His official job was something called arbitrage trading. In simple terms, the Nikkei 225, an index tracking Japan's biggest companies, was traded as futures contracts on 2 different exchanges, one in Singapore, called Simex, and one in Osaka, Japan. Sometimes, for a brief moment, the exact same contract would be priced slightly differently on the 2 exchanges. Think of it like noticing a shop selling the same phone for $500, while a shop across town sells the identical phone for $505. You could buy it cheap at the first shop and immediately resell it at the second, pocketing the difference, with almost no risk involved. That's arbitrage. Leeson's job was to spot those tiny price gaps between Simex and Osaka and profit from them. Done correctly, this kind of trading is about as close to risk-free as trading gets. You're not betting on whether the market goes up or down. You're just catching brief, tiny mismatches between 2 prices that should be identical. It's not exciting. It's not the kind of trading that makes headlines. But it's steady and it's safe, which is exactly why Barings management in London was comfortable giving a 25-year-old this much responsibility with this much money. What they didn't know was that Leeson had quietly stopped doing that job months earlier. Instead of locking in small, safe, guaranteed profits. He had started making enormous, one-directional bets on where the entire Japanese stock market was going to move next. That's not arbitrage, that's speculation, and it's a completely different, far riskier game. The tool that made all of this possible was a 5-digit number, account 88888. It had originally been created almost by accident months earlier to quietly cover up a small trading mistake made by an inexperienced member of Leeson's own team. Rather than report the error and take the loss properly, Leeson buried it in this unused account instead of the bank's normal error tracking system. It worked. Nobody in London noticed. And once Leeson realized how easily a mistake could simply disappear into an account nobody was watching, he started using 88888 for something much bigger, hiding his own unauthorized trades. Every time one of his speculative bets on the Nikkei lost money, instead of reporting it, he'd quietly move the loss into account 88888. As far as the rest of Barings could see, Leeson's official trading results looked fantastic. As far as the real numbers were concerned, the ones sitting quietly in an account nobody in London ever checked, he was already deep in a hole, and every month that hole was getting bigger. And here's the part that made this whole disaster possible. Nobody at Barings' London headquarters wanted to look too closely because on paper, Nick Leeson looked like a genius. In 1993, his reported trading profits came to about £10 million, roughly 10% of the bank's entire profit for the year, generated by a single 26-year-old working out of a small office in Singapore. He was treated like a star. Colleagues in Singapore reportedly treated him like the golden boy of the office, and he was said to be in line for one of the largest personal bonuses in the bank's history that same year, a reward for profits that, in reality, didn't exist. His trading limits were quietly increased, again and again, because management assumed someone generating this much money must know exactly what he was doing. Auditors did occasionally ask questions about account 88888. Leeson was quick with an answer. He'd claim it was just a technical clearing account, nothing to worry about, and hand over selectively edited paperwork to back that up. Because he controlled both the trading side and the settlement side of his own desk, he was essentially grading his own homework. Nobody at Barings ever fully reconciled his numbers against the real records held by the exchanges themselves, a basic check that, if done properly, would have exposed the entire scheme almost immediately. Instead, London kept sending him more money to trade with, convinced they'd found their most brilliant young trader. In reality, they were simply funding the hole he was digging for himself, one wire transfer at a time. By 1994, the losses hidden in account 88888 had grown to roughly £200 million, already enough to seriously damage the bank if it ever came to light. Leeson was now trapped in exactly the kind of thinking that ruins gamblers everywhere, convinced that if he could just make one more large bet and get it right, he could win back everything he'd lost and erase the evidence before anyone found out. It's the exact same impulse that keeps gamblers at a casino table long after they should have walked away. The conviction that the next bet, the bigger bet, is the one that finally fixes everything. So he kept doubling down. He built an enormous, complicated position betting that the Nikkei 225 would stay relatively calm, trading within a narrow, predictable range, neither rising nor falling too sharply. If he was right, the position would generate huge profits, more than enough to quietly cover the £200 million hole. If he was wrong, the losses would be catastrophic. It was, in effect, betting the entire remaining existence of a 233-year-old bank on his ability to guess that a major stock market simply wouldn't do anything dramatic for a few months. For that bet to pay off, he needed calm, boring, uneventful markets. What he got on January 17, 1995, was a 6.9 magnitude earthquake that struck the Japanese city of Kobe, killing over 6,000 people and instantly sending shockwaves through Japan's economy and its stock market. The Kobe earthquake was one of the deadliest disasters in modern Japanese history, flattening entire neighborhoods and killing more than 6,000 people. Amid that human tragedy, financial markets reacted instantly and violently, and on the other side of the world, in a small trading office, one man's hidden bet was about to be blown apart by a catastrophe he had no way of predicting and no way of stopping. The Nikkei 225 didn't stay calm. It crashed. In the days after the earthquake, the index dropped sharply, tearing straight through the narrow range Leeson had bet everything on. Every single day the market fell, his hidden losses grew larger. A rational trader, at this point, would have closed the position, accepted the loss, and reported it. Leeson did the opposite. Convinced he could still turn things around, he made an even bigger, even riskier bet. He started buying enormous quantities of Nikkei futures, essentially trying to single-handedly prop up the entire Japanese stock market and force it back up through sheer size of his own trading. For a brief moment, he was one of the largest buyers of Nikkei futures on the planet. A 28-year-old trader in a small Singapore office, quietly trying to move an entire national stock market through willpower and unauthorized money that was never his to risk. It didn't work. The Nikkei kept falling. Every day made the hole deeper. By February 1995, the total losses hidden inside account 88888 had climbed past anything Leeson could plausibly hide, cover, or explain away. The number kept climbing until it reached a figure so large it's almost hard to say out loud. £827 million, roughly $1.4 billion at the time, generated by one person in about 14 months. To put that number in perspective, Barings Bank's entire available capital, essentially everything the bank owned that could be used to absorb a loss, was less than half of what Leeson had lost. Imagine your household's entire life savings, and then imagine losing more than double that amount in a matter of months, without your family finding out until the bank called to say the account was closed. That's roughly the scale of what happened here, except the household was one of Britain's most storied financial institutions. There was no accounting trick, no clever restructuring, no emergency loan large enough to make that number simply disappear. Once the true scale of the loss became clear, Barings wasn't just in trouble. Barings was already, mathematically, bankrupt. The bank just didn't know it yet. On February 23, 1995, with the losses about to become impossible to hide any longer, Nick Leeson packed a bag and left Singapore with his wife, leaving behind that short note in the office apologizing for what he'd done. When Barings management in London finally pieced together the true scale of the hidden losses over the next few days, the numbers were so large that some executives reportedly assumed, at first, it simply had to be a mistake. It wasn't. Leeson didn't stay caught easily. He spent the next several months moving through multiple countries, evading authorities, while back in London and Singapore, the consequences of what he'd done were only just beginning to unfold. It would take until November 23, 1995, more than 9 months after he vanished, for him to finally be identified and detained by police in Frankfurt, Germany. But Barings itself didn't have 9 months. Within days of Leeson's disappearance, the Bank of England scrambled to organize an emergency rescue, trying to find another financial institution willing to absorb Barings' catastrophic losses and keep it alive. Nobody would. On February 26, 1995, Barings Bank, 233 years old, banker to the Queen, financier of the Louisiana Purchase, was declared insolvent. Days later, it was sold to the Dutch bank ING for a single, symbolic pound. Not a pound per share. £1, total, for a bank that had operated continuously since before the United States declared independence. ING got Barings' name, its offices, its client relationships, and every one of its liabilities, including the £827 million hole Nick Leeson had dug. Barings plc, as an independent institution, simply ceased to exist. Its 233-year run ended by one trader, one hidden account, and 14 months nobody caught in time. Leeson was eventually extradited back to Singapore to face trial. In December 1995, he pleaded guilty to 2 counts of forgery and 8 counts of cheating, and was sentenced to 6.5 years in a Singapore prison. While serving his sentence, he was diagnosed with colon cancer and underwent surgery. He survived and was released early, in 1999, having served about 4 years. After his release, he wrote a memoir about the collapse, called Rogue Trader, which was later turned into a film. He eventually moved to Ireland and rebuilt a public life around speaking about risk, oversight, and the psychology of financial disaster, the exact subject he had once been living proof of. Barings' collapse changed banking regulation permanently. It became the textbook example, taught in business schools around the world, of why the person placing a trade should never also be the person checking whether that trade is real. A rule now written into financial regulation worldwide because of what happened in that small Singapore office. One person, acting almost entirely alone, with almost no oversight, brought down a 233-year-old institution in about 14 months. Next time, the country where tulip bulbs briefly became more valuable than houses, and how an entire nation lost its mind over a flower. Subscribe so you don't miss it.